I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the VinnyGMarkets channel, brought to you by Vinny G Money. I wanted to do our typical weekend in market update video. So let's take a look at what the market did. We have the S&P 500 down 0.93%, the Dow Jones down 0.23%, and the Nasdaq also down 1.10%. So you'll see that the markets were very choppy this week, very volatile. Ultimately, they were down pretty hard on Friday. But let's take a look at our indicators to see what might have caused this. If we take a look at the US 10-year Treasury, we see that it was up pretty big this week. So you see right there the reason why the markets were down. What were we saying? Once the 10-year Treasury starts rising, I wouldn't call this a spike, but once it rises, it does cause fear into the markets. Hence the sell-off this week. We opened the week off at 1.30 and we ended it at 1.36. You see there were jumps after certain days. Let's take a look at the US dollar. US dollar index. We see that it's the same thing. The US dollar index for the week was up and is currently up over 93. It's 93.25. Opened the week at 92.7, and the only thing that really saved this market that didn't make it sell off as bad was crude oil. Crude oil for the week, we see still continues to rise. Crude oil, it opened up the week at 70.59 and it closed at 71.96. So we see that crude oil is still growing strong. And we know what happens with crude oil. It does keep the energy and financial stocks up. So that definitely helped the market and helped with the sell-off this week. But let's go back to the US 10-year Treasury because we know that's the reason why the markets were overall down this week. So let's take a look. We have three catalysts that brought the 10-year Treasury up. The first catalyst is, we'll pull this article up, retail sales post surprise gain as consumers show strength despite Delta fears. So retail sales actually rose 0.7% in August, and that was much better than the expectations of a 0.8% decline. But even an increase of 0.7%, I personally feel that's not even that great. But what do we say on this channel? The better the economic news, the worse it is for the stock market. The worse economic news, the better it is for the stock market. So the fact that this was the slightest bit of good news, it did cause the 10-year Treasury to rise, which in essence brought the market down. Now let's go to our next catalyst. China's second largest property developer by sales, Evergrande Group. China's embattled developer Evergrande is on the brink of default. Snowed under its crushing debt of $300 billion, Evergrande is so huge that the fallout from any failure could hurt not just China's economy, but could spread to markets beyond China. So this piece of news has been sending shockwaves through all the markets around the world. But how surprised are we really? We know we're in tons of debt. All these companies are in tons of debt. This is not really a surprise to us. This is going to happen more often. And we know that it's problems in the debt market that's going to cause the eventual market crash. Me personally, I don't believe that this is going to be the big event that brings the market down. I know the CNBCs and Bloombergs of the world, they're claiming that this is going to be very bad for the stock market and this and that. We know we're going to continue to look at the 10-year Treasury. Again, it did rise. I don't consider this a spike. It's still on the upper bound of the range that we're looking for. So I truly don't believe that this is going to be any type of big event that's going to affect the market overall. I still think we're going to start hitting record highs after record highs. It's not unusual that we're having a down month after 7 straight gains in the S&P, 7 straight months of gains in the S&P 500. So this is all just normal. So let's go to our third catalyst, which is the reason why I believe the 10-year Treasury did actually rise this week. The Federal Reserve does have a meeting on September 21st. We have Uncle Jerome in the house. He's going to come in and go over what we're doing with our financial policy. And what we just saw in the 10-year Treasury this week is just speculation that the Federal Reserve might start tapering sooner than later. But what do we do on this channel again? We don't play that guessing game. What do we do this week, even with the market down? We cherry-picked JP Morgan while it was down on Tuesday, selling some puts with $155 strike price with a Friday expiration. So that's what we're going to do this week. We're going to see if the markets go down on Monday into Tuesday and the Federal Reserve comes out with their typical nonsense of being vague, saying we might taper, we might not taper, and not given any clear direction. That's telling us that they're going to continue buying assets at this historical rate. And then the market should start rising again at some point. So if the markets do dip and we do get that positive news from the Federal Reserve, that's just going to present opportunity for us to buy those dips and possibly sell some puts if we find good opportunities after the Federal Reserve confirms there will be no taper this month. And actually, going back to China's Evergrande Group situation, because we keep our ear to the street, we're taking a look at what the People's Bank of China is doing. So what are they doing? They're adding $14 billion in cash as Evergrande's pain rolls markets. So what does this matter to us? What's the People's Bank of China? They're a bank under the Bank of International Settlements. Who's also under the Bank of International Settlements? The Federal Reserve. These are all central banks. They're all working together. So you could see that this is the first time. Let's take a look. The People's Bank of China added $14 billion of funds of net basis through 7-day and 14-day reversal repurchase agreements on Friday, the most since February. Today was the first time this month it added more than 10 billion yuan short-term liquidity into the banking system on a single day. Now, because the People's Bank of China is also ran by the same people who run the Federal Reserve, we see that they're not done tapering or not providing liquidity to these markets. This is an example that if there's still a crisis, they're still going to pump money into the market. And speaking of pumping money into the markets, let's take a look at the reverse repos this week. From Monday to Friday, we still see they're doing reverse repos of a daily basis of $1 trillion+ each day. So until that changes, that's bringing us no reason to believe that the 10-year Treasury is going to spike. And also the US dollar should cool down once the Federal Reserve meeting confirms that there will be no taper this month. And speaking of not tapering, let's pull up our next news article. Global debt is fast approaching record $300 trillion. I repeat, $300 trillion. Total debt levels, which include government, household, and corporate bank debt, rose 4.8 trillion to 296 trillion at the end of June. And this is all done by the Institute of International Finance, which it said on Tuesday. And I also find this amusing how they try to spin this as a good thing, that the global GDP debt ratio decreased 10%. Debt as a share of gross domestic product fell to around 353%, down from its record high of 362%. So to nearly 300 trillion in debt. The fact that this dropped 10% is supposed to be a good thing. Again, absolute joke. So let's go to our next article. Consumer prices increased 5.3%. Again, they try to say that this is a good thing, that it didn't rise as highly as they expected. But still, from last year, consumer prices rising 5.3%. That doesn't help anybody. And going to our next article, rents across the country were up 11.5% in August. A certain city in Florida up nearly 31%. So it's just costing people more to actually live. And going to our next article, again, nothing good. U.S. Census data shows with the pandemic unwound progress on poverty. The poverty rate in the United States rose to 11.4% in 2020 after reaching a 60-year low in 2019. And it has interesting data when it comes to salaries. Median inflation-adjusted household income decreased 2.9% last year to $67,000. According to annual data released Tuesday by the U.S. Census Bureau. And first-time jobless claims came in this week at another 332,000 people. Again, these numbers aren't good. But what do we always say? The worse the economy, unfortunately, the better it is for the stock market. So all this news would lead us to believe that the stock market should keep going higher, because with all this bad financial news, how is the Fed going to taper at a time like this? But again, we'll get confirmation of that on Tuesday. We'll wait to see what the Federal Reserve, what Uncle Jerome tells us. We'll still monitor those reverse repos, and we're still going to keep an eye on that 10-year Treasury just to make sure it doesn't spike. Again, hypothetically, in case we do see it spiking, we're just going to change our views on the market. It's that simple. We keep our long-term holdings, and we could consider selling calls as opposed to selling puts. but I don't think we're anywhere close to going down that route. And the only scenario and narrative I see where the Federal Reserve can start tapering is, again, we're going into the holiday season, so there's going to be more job opportunities out there, and people are going to want to go back to work to make extra income for the holiday season, buy more gifts, able to go out more, go out to dinner, Christmas dinners, whatever it may be. So if those job numbers during that time get significantly better, that could open the door for the Federal Reserve to actually start tapering, which could definitely affect the 10-year Treasury and overall then affect the stock market in a negative way. But overall, when it comes to this job market post the holiday season, if people really start looking for work, they're going to realize that it's going to be too late at this point, that a lot of their jobs are being given to technology, robots, drones, algorithms, AI, the fourth industrial revolution. In a prior video, we pulled up that AP report on how all these companies are investing into technology so they don't have to hire new people. Now, I found two good, interesting articles when it comes to the fourth industrial revolution and companies transitioning to technology. And before we go over these articles, I just want to state that this problem was created by the NWO. They created a situation, I think we all know what the situation is, that made all these people lose their jobs, which shut down how many small businesses. But at the same time, keeping people complacent being at home, giving them all this extra free money, so no one really cared, and it seemed like a win-win for everybody. People didn't have to work, and they were getting extra unemployment benefits for an extended period of time. But we will start seeing in the future where if people are looking for jobs, a lot of those jobs are going to be taken by technology. So let's pull up this first article. Kroger's CEO says finding talent is grocery operators' greatest challenge as it teams up with Instacart. So Kroger's saying that they can't find people to work, and other major retailers as restaurant chains have also spoken about the struggle to fill positions in the tight labor market. But on Tuesday, Kroger announced a new strategy to grow its business without the need to bulk up its own staff. It struck a deal with Instacart. So these companies are going to start making maneuvers where they don't need to hire as many people because the problem is created that the people don't want to work, so it doesn't look like they're the bad guy in the situation. When down the line, they're not employing as many people as they could be because they're using all this technology now. And we also have Walmart to test self-driving cars in multiple cities with Ford and Argo AI. Autonomous driving, this is a real thing. It's going to eliminate a lot of delivery people, and they're going to keep people out of their stores, so they're not going to have to employ as many people to man the brick and mortar stores. More people will just be ordering online, and the packages you order are going to be delivered to you by a self-driving car and a possible robot that's going to bring the package to your door. I'm going to go over this more once I make that fourth industrial revolution video. All the technology is there. It's just a matter of when, not if, these companies start implementing this technology. And by the time the people wake up to realize what's going on, it's just going to be too late. And just real quick, when it comes to crude oil, we'll pull up these two articles. Oil prices rose over $2 on Wednesday after data shows a larger than expected drawdown in U.S. crude inventories. I believe that means that more of the crude inventories got used up than expected. And also, oil supply losses from Hurricane Ida reached 30 million barrels, so we still see the effects of that hurricane on crude oil. And I still believe over time crude oil is going much higher. And to go over the crypto market real quick, we see that the market was up even though we did have the back contracts. Grayscale did make $2.5 billion in purchases for the week, which was able to swing the market somewhat higher. This week we do have CME at the end of the week, September 24th, so I would expect a volatile week. I would expect a pullback. A lot of times we haven't been getting the pullbacks every time I say it, but again, we need to monitor Grayscale, see if they're making any purchases, and also to see what Tether is doing. Tether's been flat this week, so if Tether stays flat and we don't get any purchase from Grayscale, I would expect a pullback, but we'll see what Grayscale and Tether does to see if we actually get that pullback. So I think that pretty much does it for the week. That's basically everything important that we need to know, and I just want to thank everybody who tunes into the channel. It is much appreciated, and now I'm going to continually try to keep people ahead of the financial news and what you hear in the financial markets so that you have an edge over these people when it comes to making financial decisions. So if you like what you hear, continue to tune in. Hulk smash that like button. And as always, I'll leave everybody off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real. and may he bless you.
And I meant that with sincerity. I haven't heard anybody in our political conversation describe the threat as clearly and compellingly as you have. Why should we be worried about automation?
Well, if you look at the backdrop, we automated away 4 million manufacturing jobs in Michigan, Ohio, Pennsylvania, Wisconsin, Missouri, and those communities have never recovered. Where if you look at the numbers, half of the workers left the workforce and never worked again, and then half of that group filed for disability. Now, what happened to the manufacturing workers is now going to happen to the truck drivers, retail workers, call centers, fast food workers, and on through the economy as we evolve and technology marginalizes the labor of more and more Americans.
What will be the effects of that to you? I mean, that's a massive displacement of people. What will happen once that happens?
Well, as you said, I think it's going to be disastrous, where if you look at truck drivers alone, being a trucker is the most common job in 29 states. There are 3.5 million truck drivers in this country. And my friends in Silicon Valley are working on trucks that can drive themselves because that's where the money is, where we can save tens, even hundreds of billions of dollars by trying to automate that job. But I was just with truck drivers in Iowa last week, and imagining that community recovering from their income going from, let's call it $50,000 a year to much, much less than that catastrophically, it's going to be a disaster for many, many American communities.
You're one of the only people I've ever met who's honest about the effects of deindustrialization. I remember in Washington, the idea was they'll all become computer programmers, and so everything is fine, but that didn't happen.